Welcome to your daily stock market summary from MarketSnap. Hey everyone, it's great to have you back for another deep dive into the wild world of the markets. Today, we've got a lot to unpack with geopolitical tensions shaking things up, mixed signals from inflation data, and some standout moves in individual stocks. So, grab your coffee and let's break down what's driving Wall Street right now, always keeping our long-term investment perspective in mind. First up, let's talk about the major indexes. It was a choppy day out there with the Dow Jones taking a hit, sliding a bit over 0.5%. Meanwhile, the Nasdaq managed to eke out a tiny gain, showing some resilience in tech. The S&P 500 hovered near flat, reflecting the uncertainty gripping investors. What's behind this? Well, a lot of it ties back to broader economic concerns and geopolitical noise, which we'll get into shortly. For long-term investors like us, these daily swings are noise, but they do hint at short-term volatility we can't ignore. Speaking of volatility, the big story today is the ongoing conflict in the Middle East, particularly around the Strait of Hormuz. Tensions with Iran have sent shockwaves through energy markets, with oil prices spiking hard earlier this week before cooling off a bit. There's chatter about potential disruptions to global supply chains, and some are even throwing around numbers like $200 a barrel if things escalate further. For us long-term folks, energy price spikes can pressure inflation and consumer spending, so it's a macro trend to watch. In the short term, though, this uncertainty is keeping markets on edge, with mixed signals from the Trump administration adding to the confusion. Zooming in on the broader economic picture, inflation data dropped today, and it's a bit of a mixed bag. The Consumer Price Index held steady at 2.4% for February, which is in line with expectations and suggests the Fed might keep rates unchanged for now. But here's the kicker. Geopolitical risks could reignite price pressures, especially with energy costs in flux. Experts are already warning that March data might show a spike due to gas prices. For long-term investors, this reinforces the need to stay diversified. Rising costs can erode returns if you're too exposed to cyclical sectors. Now let's shift gears to some of the day's big movers, starting with the winners. Oracle stole the show with a massive jump of over 9%, fueled by strong earnings and booming demand for AI-driven cloud services. Energy names also shone bright, with Petrobras and Valero Energy riding the oil wave with gains of over 5% and 6%, respectively. These moves highlight how sector-specific tailwinds can create short-term opportunities, even in a shaky market. For us long-term players, Oracle's AI pivot is a reminder to keep an eye on tech's transformative trends. On the flip side, not everyone had a good day. Constellation Energy dropped over 5%, leading the pack of large-cap losers. Novartis and Philip Morris also took hits, each down more than 3%. These declines reflect broader sector pressures and some profit-taking after recent runs. As long-term investors, these dips can be entry points if the fundamentals hold up, but in the near term, they signal caution in overexposed portfolios. Looking at the most active stocks, Nvidia continues to dominate trading volume, inching up slightly as AI hype persists. Oracle also saw heavy action post-earnings, while Intel climbed over 2%, showing renewed interest in legacy tech. These high-volume names often reflect where the market's attention is focused, and for us, they're a pulse on sentiment. Short-term traders might chase these moves, but our strategy is to assess whether the underlying growth stories align with our decade-long horizons. Diving into the market movers, Tesla caught some positive momentum with a 2% gain, shrugging off recent delivery concerns for now. Amazon, on the other hand, slipped a bit, reflecting broader retail and tech softness. Petrobras again made the list with its strong energy-driven performance. These names are often bellwethers for their sectors, and for long-term investors, they're worth monitoring for macro shifts, especially Tesla's role in EV adoption and Amazon's grip on e-commerce. Let's talk earnings, as this week's calendar is packed with heavy hitters. Oracle already crushed it with a stellar report, reinforcing the AI infrastructure boom. Looking ahead, we've got big names like Adobe and Dick's Sporting Goods reporting soon, which could sway sentiment in tech and retail. These results often set the tone for short-term sector moves, but for us long-term investors, they're data points to gauge durability of growth trends. You can find exclusive earnings transcript summaries on MarketSnap for a deeper dive into these reports. Peeking at the week's top performers among large caps, Garmin led with an impressive 21% surge, likely tied to strong demand in wearables. Lumentum Holdings and AppLovin also posted double-digit gains, showing strength in tech and mobile app spaces. These weekly movers can signal emerging trends, and for us, they're a reminder to reassess allocations if a sector's momentum looks sustainable over years. Conversely, the past week wasn't kind to everyone. Genuine Parts Company tanked over 20%, dragging down auto-related sentiment. Rivian and Blue Owl Capital also saw significant double-digit drops, reflecting EV and financial sector struggles. For long-term investors, these pullbacks might be buying opportunities if the core business models remain intact, but near-term headwinds are clear. Wrapping up with sector performance over the week, industrials topped the list with a solid 2% gain, followed by consumer cyclical names. Energy also showed strength with a standout 4.6% jump, no surprise given the oil drama. These sector moves highlight where short-term capital is flowing, but for our long-term strategy, they're a cue to balance exposure. Energy's volatility isn't for the faint-hearted. On the weaker side, healthcare lagged with a slight decline, while utilities and financial services also underperformed. These sectors are often seen as defensive, so their softness might reflect broader risk-off sentiment. As long-term investors, we value stability in these areas, so it's worth watching if this weakness persists or signals deeper issues. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and in-depth SWOT analyses to keep your long-term investment game strong. Hit that like button, subscribe, and we'll see you tomorrow for more market insights. Stay invested, stay informed.